In today's video, I want to deconstruct the data center investment thesis and talk about the specific components that make up that thesis, where the money is flowing and where it will continue to flow, and where it will flow into the future, and ultimately land on some investable ideas for today. This is a generational investment opportunity going on, and most people are missing it. So let's jump right in. A lot to cover here. I'm excited to share it with you. So let's go. The data center is made up of much more than construction companies and NVIDIA chips. The data center anatomy, if you will, is made up of four subcomponents. First is the infrastructure and land. Think of it as like building the shell. What is that physical data center? Number two, the power and cooling systems. This is huge and a big constraint in data center development today. Next is the technology stack. Think the semiconductors and the communication components. This is where a lot of the action has been over the last couple of years, but think even just in the last couple of weeks with stocks like AMD. And then we have the hyperscalers, the Googles of the world and the Microsofts of the world. Each one of these separate components represents a specific opportunity in the value chain to invest in. Hey, so before we get too far ahead of ourselves, please consider hitting the subscribe button. I'm new to YouTube, so I still get excited every time somebody subscribes, and it tells me that I'm not just speaking to myself. Thank you in advance for that. So let's start with the infrastructure and land component. There are currently 311 major data center locations under active construction in the United States as of early 2026. These sites represent a total IT capacity of roughly 15.9 gigawatts currently being built. To put that into perspective, the entire existing U.S. operational capacity is approximately 17 gigawatts, meaning the U.S. is effectively trying to double its entire data center footprint in a single construction cycle. Now, this build out is extremely top heavy, with only two states representing more than 100 active projects, and that's Texas and Virginia. Now, to understand the true breadth of this supercycle, total spending on U.S. data center starts is projected to reach $116.4 billion this year. In the first 2 months of 2026, the U.S. saw $36.9 billion in new data construction starts, a massive jump from the $1.4 billion recorded in the same period last year. The average cost of a single hyperscale phase is now exceeding $200 million, with AI-optimized facilities costing upwards of $20 million per megawatt to build. But here's the constraint. Many planned projects totaling over 280 gigawatts are effectively stalled because grid interconnections in primary markets like Northern Virginia are booked through 2030. Qualified mechanical, electrical, plumbing specialists are currently booked 12 to 18 months out, which has led to a 50% increase in the average cost per square foot over the last 2 years. The scarcity value, think supply and demand, of these 311 active sites is exceptionally high. Because power and labor are so constrained, any project that is already under construction has a significant competitive advantage over the 899 planned projects waiting for grid approval. And at the expense of giving away the plot too early, Microsoft and Amazon have the highest number of active projects today. But we're going to talk about hyperscalers here in a few minutes. Okay, so that's the land and infrastructure component. So now let's talk about powering these massive campuses. And this is where it gets really interesting and truthfully a little bit scary as well. The proliferation of data centers, specifically driven by this AI arms race, has fundamentally shifted global demand projections. For the first time in decades, electricity demand in developed nations is growing at a rate that is stressing existing power grids. Consider this. In 2022, total power consumption from global data centers was 460 terawatts. It's projected to be between 800 and 1,000 terawatts this year. So admittedly, there are a lot of ways to solve this problem, but what won't solve it is the existing power grid. There's hydrogen, there's fossil fuels, there's geothermal systems, but the industry seems to be aligning behind nuclear. Jensen Huang this week stated that nuclear is the answer to the AI data center problem. So here's a fun fact. If you type in how to make a perfect cake into Google, that transaction will take about 0.3 watts of power to produce an answer for you. If you type that same question into ChatGPT or Gemini into AI, it takes 2.7 watts of power, almost 10 times the amount of power to give you that answer. So look, This is a major constraint to building out these data centers. Supplying power to fuel this insatiable appetite for AI is going to take much more than what the current power grid can handle. And so we have to look at these SMRs, these small modular reactor companies, as a growth opportunity for the next couple of years. Okay, so that covers power. So let's now talk about the technology stack. Now, to be clear, I could spend the next 3 hours talking about the data center technology stack, and I assure you, you would click off in 5 minutes and this video would be done. So I want to split it into chips and communication services because, quite frankly, that's where the action is right now. To talk about chips, we have to start talking about the big three: AMD, Intel, and of course, NVIDIA. NVIDIA having about an 80% market share in an environment where the pie is getting much, much bigger. So is it better to invest in the big dog or the up and comers? Can't believe I'm saying AMD and Intel are the up and comers. But AMD and Intel stock have exploded over the last couple weeks when compared to NVIDIA. And why is that? Again, we have a pie that's getting bigger, so everybody's benefiting. It's just AMD and Intel, as they grab market share from NVIDIA, are benefiting more. Now, in an environment where there's a war being fought, and we'll call the AI arms race a war, it's always best to bet on the bullet manufacturer. And the bullet manufacturer in this case is Taiwan Semiconductor. They are the world's largest foundry of manufacturing chips for a wide array of players. So regardless of who wins the arms race, they will benefit. Now, along with these chip manufacturers, the hyperscalers are trying to get in on the action to reduce costs and increase efficiency. The most famous of which is Google right now with their TPU set. Amazon Web Services is also doing it with Trainium, and Microsoft and Meta are getting in on the action as well. Okay, so that leads us to communication services providers, and they are absolutely ripping as a stock base. Let's talk about a few of them. I can't talk about all of them, but I'll talk about a few of the big ones to give you an idea. First of all is Broadcom. Broadcom strategy is focusing on creating switch silicon that can handle massive data flow between thousands of GPUs. Remember, the big strategy going on right now in communication services providers is a shift to next generation center communication components to increase bandwidth density and energy efficiency, going back to our energy conversation earlier. Broadcom is a major developer in that. Secondly is Marvell Technology. Marvell is positioning itself as an end-to-end connectivity provider, moving beyond switches into custom AI processors and digital signal processors. And the third one worth talking about is the NVIDIA investment. NVIDIA is investing millions and millions and millions of dollars into other companies, specifically communication service providers. Two of these examples is in 2026, NVIDIA announced a combined $4 billion investment into Lumentum and Coherent. Check out those stocks if you want to see absolute rips. But they're doing that to secure production capacity for advanced fiber optics. As I spend more and more of today recording this video, I'm starting to notice my hair is starting to look more and more like Alex Karp. I hope that doesn't happen by the end of this video, and we'll use that as a self-deprecating humor to lead into the hyperscalers. Everything we've talked about so far is being funded today by the hyperscalers, the top 5 of which are projected to spend $700 billion this year on building out this AI dream of tomorrow with the hope of monetizing that in the future. The bull thesis behind this huge investment is that these companies are creating such an insurmountable moat that no one's going to be able to touch. These companies, Microsoft, Google, Amazon, Meta, they're spending so much money that any new entrant into the market in the future will never be able to catch up. Now, the bear thesis behind this is they're spending too much. They're spending so much, and there's so much of a capital expenditure outlay that it's going to create massive debt problems for these companies in the future. The truth is, that's the same bull and bear case that they made about the internet, the automobile, and the tulip bulbs. It's the same story we continuously hear, and bubbles do burst, and eventually this will be a bubble, but it doesn't burst until the spending cycle is done, and the market can differentiate between the winners and the losers. Okay, so that's the summary on the different components that make up the data center trade. Now I'm going to shift into my opinion on what I will be investing in, and you know what they say about opinions. So first off, I missed the Intel and the AMD trades of the past week or two. They have absolutely ripped. I've also missed the communication services companies ripping over the last couple months, and I don't chase. I'll be waiting on a pullback for both of those before getting in. Maybe I'll get it, and maybe I won't. If I won't, I'll be crying because I believe that we are still in the early innings of these stocks exploding. But NVIDIA is just now breaking out. And when they report earnings at the end of May, if they solidify a massive earnings and a guidance raise yet again, all of these chip makers are going to rip. But NVIDIA will absolutely benefit the most from that. For me personally, I'm most interested in these small modular reactor companies. They need to use nuclear to solve this power problem that we talked about earlier. And SMR companies are going to be the beneficiary of that capital outlay. Here's 4 examples. NuScale Power, ticker symbol SMR. They are the first company to receive NRC design certification for an SMR. Oklo, backed by Sam Altman, they focus on fission batteries, fast reactors. They recently gained significant momentum following a 2026 White House policy update favoring space-based and micronuclear deployments. X-Energy went public earlier this past week. They specialize in high-temperature gas-cooled reactors and proprietary TRISO fuel, which is designed to be melt-proof. And lastly, NNE, Nano Nuclear Energy. They're a small player focused on micro reactors, easy for you to say, that are small enough to be transported by a truck, targeting remote data centers and military application. All 4 of these companies look to benefit greatly from the capital outlay going against data center development right now and solving this massive power issue. And lastly, for a long-term investment thesis, you got to look at the hyperscalers. It is hard to believe that they are going to spend this much money and not be able to benefit greatly from it. If nothing else, to create such a large moat that nobody's ever going to be able to touch them. Google and Microsoft are doing a tremendous job in building that moat. Meta, there's a lot more questions around Meta right now, but Google and Microsoft, I think, are true beneficiaries for the long term. Of those, I think Google's stock setup right now looks the best. Hey, thanks for watching. If this video helped you spot your next move, hit that like button and let me know in the comments which hyperscaler you're considering. This is PMV Profit, and I'll see you in the next one.